Hi, welcome to the Market Alert for Friday, the 22nd of March 2024. Just before we get into the alert, just to let you know, I'm travelling this weekend, so there'll be no market alert for Monday. So just to give you the heads up there. Okay, let's have a look at yesterday. Stocks and the dollar gain on good news. Bitcoin, bullion and black gold sink. So that means the metals got hammered as predicted yesterday. No surprise there. We'll look at that in more detail shortly. And US stocks posted fresh record highs amid a slew of central bank updates and firm USA data. So economic news for today. We've got retail sales for the UK at 7 a.m. Then we've got German news at 9 a.m. all-day Euro summit. And Powell will be speaking at 1 p.m. today, half an hour before the markets open. So let's get on. Let's have a look at these new fresh record highs for the markets and start off by looking at the Dow. So in the Dow, we've hit 39,895, not far now till we get to the 40,000, which I've been barking on about for the last few weeks. That will be no problem. That will be taken care of before we head then to the magic 50,000 by the end of the year, because it's an election year. They don't want the markets down. They want the Democrats will want to get as many votes as they can, and the only way you're going to persuade people, given this climate, is to see their pensions increase, their investments increase, and a better future and so-called economic stability. So they'll just keep printing and doing whatever they need to do in order to keep this illusion alive. So for me, there is no surprise whatsoever that we're heading towards 50,000, or will be after we've taken out 40,000, which is a piece of cake given where we are now. All it needs is central bankers like the Bank of England coming out and saying that it looks like we're going to be able to reduce rates. Market then takes off to the upside. And also when Powell comes out and says they're reducing QT, quantitative tapering, then there's no surprise whatsoever. That's all they need, is a bit of news to do that. And you can see this yesterday with the Dow moving up 200, 300 points there, no problem at all. Overnight, the market is still sitting at the close. It's above the DP. The high is not too far off, and neither is 40,000, and it's also Friday as well. If you're going to do it on a Friday. So again, no surprise to see the market heading there. You see we've got 39,895, so not far to go at all. Let's have a look at the German DAX. German DAX, new all-time high, 18,209. 19,000 is the next upside target, with 18,500 in between. Yesterday, prices continue to move to the upside, as can be seen there in the 30-minute chart. So we had a profit taking to begin with, but all it needed was Bailey to come out and make a comment, follow through, and also to absorb the data from the night before from Powell, and off we go. So the high, again, not too far away for the German DAX. Given yesterday, though, we could see some cash sales, and the market then moved to the upside if the Dow attempts to run up to the 40,000 level. S&P 500, 5261, new all-time high. Market continuing to move to the upside. Narrow range, though, for yesterday for the Dow, the DAX, and also the S&P there. Very, very tiny range. So maybe there's a bit of selling around as well. 30-minute chart, we were down in the morning, up in the afternoon, but sideways there, not making any great moves like we did see in Wednesday evening. So could be a bit of profit taking around. The market came down towards yesterday's low as well, but needs to get back above the close and the DP there in order to get up to the high, which is the all-time high. FT100 sprang into life following Bailey's comments yesterday, 7,903, heading back to 8,000. Monthly chart shows you the all-time high at 8,045.7 there. 30-minute chart for yesterday, you can see this after Bailey spoke, market up, and also I say the comments and the votes for the whether to increase or decrease rates was a positive or looked in favour of reducing rates, which made the headlines during yesterday. US dollar spiked to the upside yesterday, again on central bank data, and also on the prospect that some of the flash news was pretty hot, and also leading towards, again, hawkishness, where the dollar would strengthen on the basis there was another rate increase. This is complete and utter BS. There's not going to be any more rate increases, and there's not going to be any decreases for a while either, until the US Powell said that they're going to get inflation down to 2%. Well, good luck with that one. So we can expect more of the same going forward. As I said yesterday, the metal, particularly silver, has reached its peak. This is where it's all game over and we head back down to the lows that we saw a few weeks ago. It's all over for silver until it has another chance to consolidate. So back down to 22 is where we're going to be heading. You can see the selling there yesterday. They want the price of gold down as well. The best way to do that is to sell silver off using futures contracts, move the market to the downside. That takes the pressure off gold, brings that back down, and no doubt towards the $2,000 level. And then central banks will be interested in adding to their stockpile once more. There's the decline, no problem at all. We're already down and below the low overnight, so it's another down day for silver. Gold, also you can see the selling there in the gold market yesterday, down on the overnight and heading back down as well, as you can see there towards the low. That's likely to be taken out today. Let's just go to the monthly chart. Let's find the last support, which is there, 2,136 will be the first downside target. But for me, getting back down, there you go, going down below $2,000 an ounce is probably going to be the goal here. In fact, let me just have a look at this low, because that's probably where it's come from. So yeah, watch the low of this monthly bar, 2038. For me, the bull market's over for the time being. There's going to be a shakeout in these markets and they're going to be aggressively moved to the downside for the reasons I've just mentioned. Let's have a look at the gold-silver ratio. And as you would expect, moving back up, big move to the upside. As I've said before, we're going back to 92 and now we can start making that move. Once you get down to these areas here in the gold-silver ratio and just slightly lower there, you will see the price of silver getting crushed, which we saw yesterday, and that's going to set the tone now for the next few weeks, where the price of silver and gold will be pushed to the downside once more. The party's over for the time being, for the reasons, like I say, of wanting to accumulate more gold for central banks, but they're not going to pay through the nose for it. And when they can have the assistance of JP Morgan and co coming in and selling funny money to move these prices to the downside. Let's have a look at yesterday's trades. So in the futures market yesterday, prices sideways. Then we got into the flash news. You can see the market moving sharply to the downside on that news, before finding support. Eventually we go through to the DP and then find a bit of support and then continue lower through the mid-morning session there, and of course then the market turns around. We then head into the US for the 1:30 starts. So we see the US market moving back to the upside. We have a potential buy signal that was nearly stopped out, coming back towards the stop there before prices reversed and then moved higher. And that's the way it continued all the way up to the BRN and to the end of the trading session there. Let's have a quick look at the overnight market. And here you can see the 2-minute DAX is off the high, below the close, and looks like it's going down towards the DP. We've got the retail sales out at 7 a.m. So again, don't be surprised if we get a bit of a shakeout to the DP before prices turn around and move higher. This is yesterday, as you can see there, the market moving up. But we are due for a correction in these markets as well, given the vertical rise we've seen over the last few weeks in all of the stock markets. Okay, that's it for this one and for this week. So have a great weekend. I will see you in Tuesdays at Market Alerts. So as ever, thanks for watching. See you in the next one.